Hello and welcome to the Motoring News Zone, a show we take you through all the biggest stories in the world of cars right now. This week, Tesla has announced that there are new finance options to try and boost the sales of the Model 3 and the Model Y. Audi have paused US imports of their cars, but are reportedly looking to manufacture cars in America as soon as next year, and we explain all about that and a whole lot more in today's video. Let's dive in. It's fair to say that Tesla aren't doing particularly well at the moment. Their reputation is not the best right now. The reputation of their owner is far from the best right now. And their sales, of particularly their Cybertruck, is really down on what they were hoping so far in 2025. So with that in mind, Tesla are in fact offering a lot more incentives. They are pretty desperate really to up the sales of their cars. And there's a few ways they're trying to do that. If you're wanting to finance a Model 3, for example, you now can do so for up to 60 months on 0% APR if you meet certain financial requirements. Now, the condition as well with this is that you have to put a down payment, a deposit effectively, of 15% of the overall value, which is around $6,000 to be able to do that. But if you can do that, then of course you can go for the 0% APR. So you will save a lot in the long run if you're wanting to go for this option for a Model 3. Tesla have also stated that buyers who qualify for the $7,500 federal tax credit for electric vehicles as well can use that for the down payment if they want to. If you want to go for a slightly longer one than 5 years, if you go for a 6-year deal, you get 0.99% APR on that as well for a Model 3. So there is that option as well if you wish to do so. A little bit of interest on there, but really low comparatively compared to most loans. Now, currently, it's only the Model 3 that they're doing this deal on. None of the Model X or the Y or the Cybertruck have this kind of deal, but it could always be expanded to them in time, of course. Now, the self-driving mode, the controversial self-driving mode that's not really self-driving, the one I've spoke about quite a few times here on this channel, guys. It's the one that, it's not self-driving, it is assisted driving. I guess you could maybe say it is something like that. Basically, you still have to, take control of the wheel and stuff every now and again just to be sure. It's not fully tested out on the roads, but it is something that is available to some users. And it is available now for a limited amount of time on certain models, although for how long we don't know. They've not said yet, Tesla, but presumably for at least a little while. But how long that little while is, we don't know at the moment. But if you do get a new Tesla with the FSD, the fully self-driving mode on, then you will lose that on your old model, presuming that you still have it at that point, of course. But yeah, Tesla aren't doing particularly well in 2025 so far. Deliveries were down 13% globally for Teslas in the first quarter of 2025, registering at 336,000 units in total. The company blamed the lower deliveries on production delays due to the changeover of the updated Model Y. CEO Elon Musk said in an earnings call the same day as the release of the results as well that macroeconomic issues and uncertainty among new car buyers are also to blame. I think a lot of people are uncertain about Tesla in general. I'm not sure the buyers are the problem really here, Mr. Musk, but that's just my opinion, of course, and I know a few people do share that, of course. But yeah, so there are some more incentives there, which that probably will help, but only on the Model 3. So, it's not going to do widespread changes really for Tesla. I don't think a lot of people are going to want one more because of that. Maybe it'll help, kind of stem the kind of decline of sales in Teslas, but I don't see a massive boost coming from that personally. But hey, there we go. I want to hear what you have to say about it, guys. Of course, as always, is that going to make the difference for you? Are you going to consider buying a Tesla because of that difference in the finance structure of the Model 3? I want to hear what you have to say in the comments below. All right, we got some big breaking news here on the channel, guys. Audi have halted their US exports amid the 25% tariff that has been placed on foreign cars in the United States. Now, there were rumors about Audi doing something similar to this, but they have now confirmed they are doing this. They are no longer going to be importing any more vehicles into the United States and will instead sell off the current stock that they have remaining in dealerships across the country. Audi do not manufacture any of their vehicles in the United States. This affects all of the vehicles that they are selling in the country. Most of the Audis that are imported into the United States either come from factories in Mexico or in Europe. This is going to be a big loss for Audi, if we're being honest here, because at the end of the day, BMW and Mercedes, they do produce cars in the United States, or at least some of them anyway, so not all of them will be subject to this tariff, whereas Audi, of course, they did not. They've chosen not to make any factories in the United States, and therefore all of their cars are affected by this, and they are effectively pulling out of the US market, or at least preparing themselves to be able to do so. When these cars have been sold off, in theory, unless things change, they will be gone. They will no longer sell any new cars in the US, and people will just have to order them from abroad if they really want to, and that'll price out a lot of different people. People will just go for something like a Beamer or a Merc instead, because there's not a huge difference between them. They are both similar kind of cars and similar manufacturers with a similar prestige, of course. Now, of course, the tariffs will affect Mercedes and BMW, but just not to the same extent, because not all of their vehicles are produced outside of the US. Some of them are, of course, produced within. Audi said that they estimate there are around 37,000 vehicles currently in the US ready to be sold off before the supply ends. Now, these vehicles already in the US are not affected by the tariffs. It's only for vehicles that are going to be imported into the US. That's around enough vehicles overall to sustain them for around 2 months at their current rate. So basically, by the start of July sort of time, we're expecting Audi to have run out of cars in the United States. On top of that as well, things such as the actual supply chains are also affected by tariffs. It's a really complicated issue, and it's not one that it's a very complicated and multifaceted issue. And we've talked about the tariffs and how they're going to affect the automotive market, but as far as I'm aware, Audi are the first foreign car company to effectively pull out of the US, or at least planning to pull out of the US. Now, this of course could be reversed. Tariffs can change. We've seen these tariffs change all the time recently since they've been introduced or threatened to be introduced. Things could change, but the supply chain is going to effectively be halted. We could get to June perhaps, and the tariffs could be reduced or completely got rid of, but it'd still take time for Audi to replenish their supplies, because they're not going to have cars ready to go to the US. Those cars are going to be diverted to Europe, to Asia, to different markets around the world instead. So it's a big blow to Audi. It's also a big blow to US customers. They're going to have less choice effectively. That is a brand that is effectively not going to be present in the US, at least in the new car market. Obviously, used cars are still going to be around, but yeah, interesting stuff, guys. Are you an Audi owner? Let us know your thoughts about this in the comments below. You're devastated to hear them effectively planning to pull out of the United States car market. Your thoughts in the comments below. So Tesla are struggling. This is not news, but the extent of which they're struggling has been well documented recently, and it extends far beyond the United States. It also extends to other countries around the world, such as the UK and Germany as well. New car sales for Tesla have plunged to their lowest in over 2 years in the UK and Germany, and Reuters reported on the 6th of May that sales dropped 62 and 46% year on year respectively in those two nations, and that's despite demand for EVs increasing in both nations during that time. Tesla effectively are selling less in an ever bigger market as other manufacturers eat up their market share. Tesla shares were down 2.66% as of midday on May 6th in the wake of reports detailing the drop in the sales. The company's share price fell by 41.5% from $379.28 on January 2nd to a yearly low of $221.86 on April 6th. Tesla's share price has been ravaged by an increase in competition in the EV space and reactions to Elon Musk's political activities, shall we diplomatically put it. You know what I'm talking about, those salutes he was doing on stage at the inauguration of President Donald Trump. That would have not helped his reputation. I can speak as a British person and say that that was very much negatively received, overwhelmingly in this country. And can you imagine what it did in Germany? Would have probably been even more negative. And I think, to be honest, in the balance of fairness, I don't think that would have been positively received in any country around the world, to be honest. So the question is, are Europeans turning on Tesla? Are we turning them down? Well, again, as a Brit, I can safely say that Tesla's reputation is well and truly in the toilet right now in this country. They've never been renowned as being the best EVs. They've always been a bit popular in the EV kind of circle, but overall they have a very negative reputation for a lack of quality, for being very expensive, and also being on the larger side of the EV powertrain thing. I mean, they're not the biggest by any means. They are as big as a standard SUV sort of size, but not being the smallest, not being like a Nissan Leaf or like a small Renault or a Mini or something like that. It's not very popular for city drivers to get a Tesla because our cities are not really built for cars of the size of a Tesla. Smaller cars from other manufacturers in Europe in particular are more relevant, and it's a similar story most likely in Germany as well, where of course BMW, Audi, Mercedes-Benz, they dominate the market over there, and in the EV space on top of that too. And to emphasize how bad things have gotten in the UK for Tesla, there's a few stats that Roland Percher has shared on X. He said that the UK reported 512 Tesla sales and a 0.4% market share in April. BEV penetration, battery electric vehicle, is 20.4%, and Tesla has 2.1% of this segment in the UK. Overall, they are down at 62% in terms of sales year on year compared to April last year. The last 3 months, they are down 21.4% versus November to January 2024 to 25. And the year to date, they have a decrease of 1% over the same period last year. So yeah, thank you for them to share those stats. They do not paint a very good picture for Tesla right now in the UK. And like I said, the reputation of the company is not great. The reputation of their CEO is even worse. But we cannot ignore another elephant in the room, and that is China. Chinese EVs are flooding the markets in places like the UK in particular, and that is of course making massive competition not only for Musk and Tesla, but also other manufacturers of electric vehicles as well. So it's not very positive from that side of things. BYD really trying to eat up the market share from Tesla because effectively their cars are comparatively a similar quality, but are markedly cheaper, like a quarter, a third of the price as what a Tesla is. They are absolutely trying to eat up that market space and are doing a very good job of it, to be honest. So yeah, guys, in summary, things are not going well for Tesla, as we know. In the UK, Germany, and other electric vehicle markets, their market share is shrinking quite fast for a number of different reasons. The poor reputation of course, Musk is not helping matters. The poor reputation of Tesla, in truth, is not helping matters either. And of course, the increase in market share for things like Chinese manufacturers of electric vehicles and also local manufacturers as well. For example, in Germany with Audi, BMW, and Mercedes, among many others. That's all contributing to Tesla struggling in Europe, and it's not helping their overall market share. Their revenue is going down, their sales are going down. It's not looking positive right now, I'll be honest, guys. But yeah, let us know your thoughts about Tesla in the comments below. I found some interesting data on the Wall Street Journal today regarding the sales of electric vehicles in the United States. They have hit what they have called a pothole. They have reduced in sales overall over the past month. They have reduced by 5%. And this is the first time that month on month electric vehicle sales have fallen in the US since 2021. Now, the overall car market on the whole has grown by 10% overall. So it's an interesting thing to see that the electric vehicles have, of course, gone down. Now, of course, we have brought you the many storied kind of failures of Tesla recently in the auto market, but in other markets like the United Kingdom and Germany, for example, over here in Europe, overall, even though Teslas have kind of fallen in their sales, the overall electric vehicle sales market has increased, and this is something that we haven't seen in the US. Now, if we're comparing it to the same time last year, I believe the sales have actually risen. It is on the whole an upwards trend, but it's interesting how they have actually fallen 5% in this last month. Now, of course, this is also a bit of a surprise given the fact that there's that $7,500 tax break as well for electric vehicles. So that really should be trying to incentivize people buying EVs. But clearly this is not enough reason to reverse the trend, or at least arrest the slump that we're seeing right now. Kia, Hyundai, Tesla, Ford, and of course Rivian as well, they have all seen slumps in EV sales overall over the past month. And in fact, Rivian, the Amazon-owned EV manufacturer, has changed its sales outlook for 2025. They have reduced it by 5,000 units. Now, of course, we know about Rivian and how poor of a manufacturer they are. They are the most unreliable brand right now in the United States. So it's not a surprise that they're struggling. But of course, it is not just across them. It's across pretty much all manufacturers of vehicles in the US. Now, dealerships have put this slump in EV sales down to a few different reasons, the main ones being the decrease of interest from consumers, thanks in part to the lack of actual deals on electric vehicles that have been coming recently compared to previous years. You've also got an effect where a lot of people now have electric vehicles, so the potential kind of market for new adopters of electric vehicles is getting smaller as well. Effectively a law of diminishing returns for the EV market. It has to reach a cap at some point. That glass ceiling has to be met. And they might have already met it, at least in the short term for now. And this is all coming as well as the president is as well threatening to get rid of the tax break, that $7,500 tax break that I mentioned earlier on. Apparently he's going to refuse. Apparently, he's now threatening to actually get rid of that, which again, it's not going to help the sales of electric vehicles overall. So there we go, guys. I mean, this might be just a temporary bump in the road, or is it the start of a downwards trend in the popularity of electric vehicles in the United States? Let us know your thoughts in the comments below. Another day, another video about tariffs on this channel, but this one a more positive one, particularly from a US viewpoint. This being that the second largest automaker in the world is going to apparently relocate its production to the United States, or at least part of it. Now, you might be wondering, who are the second largest automaker in the world? Well, we spoke about Toyota from Japan the other day. It's not them. They are number one. Number two, I thought it would have been Ford, to be honest, or GM, but it is actually Volkswagen. Volkswagen, of course, the German car giant that is part of the Volkswagen Audi group, and they are going to relocate at least part of their production to the United States. Now, I must stress that this is all reportedly, this has not officially been confirmed, and it's also via a less than reputable source of news here in the United Kingdom. I'm not even going to utter the name of that publication. You can probably guess which one it is. Now, currently Audi, they actually make their cars in nations such as Hungary, Mexico, Slovakia, Spain, and China. They have no plants in the United States. Indeed, Audi, all of their cars pretty much within the US, most of them, the vast majority of them will have been built in Mexico and shipped across the border. However, now, of course, that is subject to tariffs, and that will increase the cost of them. So much so that Audi has actually recently said that they are going to pull out of the United States. So this marks a big change, or at least I say pull out of the United States. They are going to stop shipping new cars in from abroad. They haven't left the US market, and obviously the cars that are already there, they will last for several months. They will last for around 6 months in total. So we're not going to run out of Audis just yet in the US. But to try and get ahead of that, apparently they are going to move to the US, or at least some of their production facilities there. Now, according to this publication in the United Kingdom, a spokesperson for Audi has said the following: "We want to localize more strongly in the USA. To this end, we are currently examining various scenarios. We are confident that we will make a decision on this consultation with the Volkswagen Group before the end of this year as to what this will look like in concrete terms." Like I said, they've got around 6 months or so until Audi's run out. That's just an estimate. Could be more, could be less. But in terms of setting something up, they've essentially got most of the rest of the year to go with that. And apparently on a recent earnings call as well, the CFO of Audi, Jürgen Ritzberger, added that Audi plans to launch 10 new models in the United States, with production locations to be announced in 2026. While no final decision has been made yet, sources speaking to German trade publication Automobile Week, Car Week, say that Audi is scouting these potential 3 locations in the United States. The frontrunner plant is apparently in Chattanooga, Tennessee, where its parent company Volkswagen already builds the ID.4 electric crossover. So the Volkswagen Audi group already has a presence directly in the United States. So it makes sense to actually pitch up tents somewhere near to where they already are. Apparently another frontrunner as well is somewhere in South Carolina, so it's most likely that they will actually go and build their plants somewhere in the deep south, which is pretty common amongst automakers, particularly foreign automakers as well. They seem to really like making plants in the southeast, probably just cheaper to do it there than in a lot of places in the north and maybe out west as well. And of course, you are closer to Europe that way as well. You're on that side of the actual country. So interesting development really when it comes to this. we'll have to see what happens with this. Obviously, like I said, this is not confirmed. This is not something that is definitely going to happen. It's just a rumor for the time being. There will be, if going off of these estimates anyway, there will be some kind of production gap really between obviously the end of cars coming in, which is right now. They said they're going to stop doing that right now, and these new cars within the United States being built. It will mean potentially, in theory, that it will be cheaper for you to buy an Audi in the United States than what it is currently, because obviously at the moment they are subject to tariffs, and more than that, they were actually subject to more shipping costs and stuff like that, but it could be more expensive because of the labor being more. We'll have to see how that works out. That's yet to be confirmed. We've not really got a similar case to kind of go with yet. This is all really new in terms of the tariffs. But what do you guys think? Is this a good thing for US car makers? Is this a good thing for Audi? Is this a benefit for the United States? I want to hear your thoughts in the comments below. Things are far from rosy right now at Tesla. We have brought you plenty of news going over how they are trying to desperately boost sales to their cars by offering cheaper finance options. Now, we did a video literally yesterday going over the option that is now available for the Model 3, a 0% APR deal that is exclusive to the United States. And they've rolled this out now as well to the Model Y, or at least a cheaper version of the finance option. It's not a 0% APR, but it is considerably cheaper than what most car loans were, and indeed those offered by Tesla as well. Basically, sales are down for Tesla, so they're trying to boost the sales of their cars overall. Their reputation is, frankly, at times people are saying in the toilet. I think that's probably about accurate, to be honest with you. Their owner, Elon Musk, of course, is rather a controversial figure, like we keep covering here on the channel. But what is this deal that they have done? What's actually changed for the Model Y? Well, in truth, it is cheaper, basically. They have reduced the finance option. The overall price of the car is the same, but the amount you would pay in monthly installments if you want to buy one over a long-term deal has been reduced. This is only for US customers and only for certain types of deals, but I'll get into all of the nitty-gritty, all of the details here in this video. So the Model Y recently got a refresh, a new generation, if you will, of that car to keep it fresh, but the sales have not been quite as anticipated for this, so they are instead offering cheaper deals for this with lower APR rates. So if you want an all-wheel drive long-range version of the Model Y, you can now get it on a 6-year loan. That's 72 months in total at an APR rate of 1.99%. The qualifier for this is that you need to put down a deposit of at least $3,999, and it's a US-only deal as well. But if you can do that, that's significantly cheaper than most APRs, which are around 6% overall at the moment. Most people are quoting, so that's significantly less than the standard rates. And like I said, this refresh, this new version, this new generation of the Model Y has only been out for 4 weeks. So that really just screams the sales not being quite as high as what they should be. We don't know how many they've sold and not publicly released those figures, and they might never do, to be honest, but it's not as good as what they would have hoped, because if it was, then why would they reduce the price of it effectively overall? Yes, the asking price is the same, but the price that people would pay per month has been reduced, so they're trying to incentivize people to actually buy it, just like they did with the Cybertruck. They made a cheaper version with a lot of key features missing, but a cheaper version of the Cybertruck. They've tried doing it with the Model 3 as well, at 0% APR loan that is available from Tesla, so they wouldn't be doing these things if things were going well, and we know things aren't going well right now for Tesla in general. And this is a complete contrast to Tesla of just a few years ago, where they had the opposite problem. They had so much demand that they actually started to increase the price of Teslas because they couldn't supply the amount of demand that was there for them. Now it's the other way around. They've got too much supply and not enough demand. It's a really, really incredible shift in just a few years, with, in truth, not a lot changing from a mechanical point of view with Tesla, but I just feel like the demand for Teslas, whether it's because of Elon Musk, whether it's because of anything else, it's just not as high as what it once was. And it's a similar story here in Europe as well. The overall sales of Teslas reportedly are down massively across the pond in the European continent, so it's not only a problem for the US market, but also for their lack of demand here in Europe as well. And this is partly to do with competition from local brands here in Europe. Volkswagen, Mercedes, BMW, Audi, all the sales of their cars are going up in terms of EV models, in particular the ID.7 from VW. So people are reporting that in some countries across Europe, major European markets, Tesla sales are down around between 50 to up to 80% of what they were before, which is terrible really for the brand. And of course, this still comes across with the backdrop of Elon Musk potentially leaving Tesla as well. There's the whole conflict of interest controversy that I spoke about in another video as well, where he is the CEO, but he's also a board member as well. Some people within Tesla are wanting to get rid of him. Apparently, he wants to maybe step away from that, and that is shown in the fact that he's got other interests, his robo-taxi, his SpaceX, and until recently, of course, his government duties as well, which he may well still stick around in the White House in some capacity. I'm not going to open that can of worms, of course, but there are rumors about him still sticking around, even though he's going to be leaving Doge. So yeah, it smacks of desperation, if I'm being honest, from Tesla. You don't put that level of a discount on a car if it's doing well. And they've proven in the past that when things are going well, they do the exact opposite. They jack up the price because they can't supply it. As it is now, they have the opposite problem. They have too much supply and no demand, or at least not enough demand to keep that supply satiated, to keep their factories running, to keep their workers paid. And it is not good. It is not positive at all. But yeah, there we go, guys. Do you own a Tesla? Are you thinking about owning a Tesla? Does this deal sound like a good one to you? Is this something that might make you want to have it? Or is it still just not a good deal? Is it not something you want? I want to hear what you think about this Model Y refresh, the old APR going down, of course, on that. Let us know what you think in the comments below. Like, share, comment, subscribe as always, and have a fantastic day wherever you are in the world today.